Netflix stock got cut in half this year, and the business did nothing wrong. Sales are up, profit is up, and it is throwing off more cash than ever. Yet the stock is sitting at near 52 weeks low, around like $77 as of right now, after 10 for one split. So either the market knows something or it just handled the best business in the streaming at a discount. So let's walk through it so we can go ahead and decide about it. Here's what happened. So after the stock split in late 2025, shares dropped about 40% this year, even while the company kept on growing. On July 16th, which is not too long ago, Netflix reported 12.6 billion in sales, up 13%. It is quite a good quarter, but a softer outlook for the next few months knocked the stock down about 9% in a single day. At the same time, it is leaning harder into live sports, expanding to five NFL games this season, including Thanksgiving and Christmas. And the ad business is finally real money, with commitments nearly doubling and management is guiding to about 3 billion this year. So here's the 30-second version of it. So Netflix won the streaming war. It has 325 million paying households. It makes real profit, and now almost every dollars of cash it takes in. The business is not the real problem. The price people were paying for it was. The stock got cut roughly in half, not because of Netflix is broke, but because investors decided its future growth was worth less than they used to think. So it has come down to this, as right now, at this size, how much room is left to grow, and can the ads and the live sport pick off where new subscribers leave off? So how does Netflix actually make money? So mostly, the simple way is 325 million households, like we said earlier, pay every single month as a subscription across a cheap ad tier, a standard plan, and a premium plan. A second engine is now switching on the ad-supported plan, which is growing fast and turning into a $3 billion business of its own. Its real edge is the content machine. Netflix roughly spends about 18 billion a year on its shows and films, more than almost anyone, and it spreads that cost over a global audience. And which they're moving on is the live sports. It's the new hook, giving people a reason to show up on a specific night instead of whenever. All right, so for the numbers, now numbers because this is where the story gets strange. Sales keeps on climbing, 39 billion in 2024, 45 billion in 2025, and 12.6 billion in just the last quarter itself. Profits growing even faster, jumping from 8.7 billion to 11 billion in a single year. And last quarter alone brought in 3.4 billion of profit in 3 months alone. That's roughly around 33% margin. This is a company getting stronger and stronger, not weaker. Hold on to it where we talk about the stock price. Here's the part that changed everything. So for years and years, Netflix burned cash making its shows, and people wonder if the model, actually works. Now it brings in far more than it spends. Very little goes into building and its gear. Real capex is under 1 billion because the money goes into content, not manufacturing factories or so on. The result is the cash machine. In 2025, about 10 billion came into the door, and roughly 9.5 billion was left over as free cash. That is the money it can use to buy stocks or write it out for a bad year. All right, so for the capital allocation, so where does the money actually go into? So the real spending actually goes into content, like we said earlier, around 16 billion in 2034, 18 billion in 2025, and a plan for about 20 billion in 2026. There's no dividend for Netflix, at least for right now. Instead of no dividend, Netflix uses spare cash to buy back its own shares. The bet is, quite simple. Spend more on the show slash sports, keep people watching, and let the profit grow faster than spending it. When it works, that's the real flywheel. and when it doesn't, it's a very expensive habit to have. All right, so let's zoom out real quick. So two things are really helping Netflix as a whole. So first thing first, the world is going to keep decreasing and keep cutting cables, and streaming is where those people land on. Second, most new members now comes from outside of the US, which spreads the risk around. Two things are working against it. A strong dollar quietly shrinks the numbers. Since a lot of the revenue comes in foreign money, and some of the countries are pushing local content rules and streaming taxes that raise and the cost of doing business abroad. All right, so for the competitive position, so on the competition, Netflix is still a very hard one to beat. Again, they have 325 million paying households. It's bigger than any other per streaming service by a wide margin. The rivals are deep pocket giants like, Disney, Amazon, Apple, and YouTube, all fighting for the same viewing hours. But here's the real edge. Netflix makes money in the streaming service, while several of those rivals are still trying to stop losing it. The real fight is not just another app, it's just not another app. Although it is attention itself, which means TikTok and gaming also count as one too. So there are four things, it could go wrong. Right here for Netflix. Again, the highest one is if the growth, runs out of room. At 325 million households, finding the next 100 million gets harder every year. The second one is medium. Even after the drop, the stock is not cheap for a slow grower. So the steady growth actually has to show up. Third, the content spending keeps climbing, and 20 billion a year is a huge bill where one week lineup could really hurt. Lastly, the live sport is costly and unproven for Netflix as of right now. Since the NFL rights cost a real money and it's early days on whether it actually pays off or not. All right, so what has to be true? So in the bull case, ads and live sports became a big profit engine. Growth stays double digits, price hikes, sticks around, and the stock climbs back as its cash cow grows. In the neutral case, growth slows cool to a high single digit. Netflix stays the best in the streaming business and keeps making money off of it. But the stock drifts with earnings instead of racing ahead. Lastly, the bear case is that the subscriber growth stalls. The ad business also underwhelmed and content costs keep rising. So business still grows, but slowly and the market keeps paying less and less for it. So here's where I land. So this is a great business selling at a lower price. And the only question is whether what that business is, worth right now. Not whether it is a good one. If you had to call it bull, neutral, or bear cases on Netflix from here, feel free to give a comment in the video. All right, thanks. Bye.